Hello, welcome to my Swing Trader Trading channel. Do you have a portfolio of mid-cap and small-cap stocks that you started at the beginning of 2023 and it's up 63%? Well, I do. Let's take a look. This is April 25th, 2024. We're here to review bi-weekly swings. First, let's go to the live portfolio and take a look. Here I have my 6 model portfolios as represented by bar charts. The number one right now is Quant Alpha, is up 85%. But we're here to look at biweekly swings, which is up 63%. The benchmark that it tracks to is up 16%. Let's take a look at the spreadsheet, which has the data in it from the beginning. And here in biweekly swings, you can see we go back in time to the beginning of 2023, and it started out, as you can see, behind the benchmark, and then in May it went ahead, and then since May of last year it stayed ahead all through up to today. Right now up 63%, benchmark's up 16%. Let's take a look at the portfolio details. Here's my Google Docs tab, which shows the detail for the portfolio. Here's the active positions here, and here's the closed positions with the audit trail. In the active positions, we had we had 4 ads. This is one here, AMTX, and we're gonna take a look at that a little bit later. And over here, you'll see that there's calculations of how we come up with the numbers, along with the bar chart. The one thing I want to point out is we did remove 4 stocks from the portfolio this update, and one that stands out as a problem, it was the no TV. This particular stock is called Innotive. I believe it's a healthcare stock, and it had a substantial drop since we added it. It does happen from time to time, and you have to be prepared for that. It's a good thing that the portfolio is diversified because it allows for drops like this. It doesn't destroy the portfolio. There's 21 stocks in the portfolio, so if one takes a tumble, it doesn't affect the results that much. And you can just kind of chalk it up to part of the investment scheme, where you have some big drops, you have some big gains, but over time, if you have a well-performing portfolio, you'll do well. Want to show the new ads. Here we are: Amethyst, Definitive Healthcare Corp, Honest Company, Silvercrest Minerals. And as you can see, the sectors are diversified. One's energy, one's healthcare, one's consumer defensive, and one's basic materials. And if we sort on market cap, you'll see that the market caps of these stocks that were just added range from a micro cap here of 154 million up to something that's kind of in between a small cap and mid cap. And also the volume is pretty good on these stocks. You can see this one here, the smallest volume is 423,000 shares a day, all the way up to Silvercrest Metals, which is 1.7 million a day. We'll take a look at the ones that we retained in the portfolio. And there's, I guess there must be 17 of them. So I'm not going to go and name them all. I just want to show you like a summary. If we take a look at the sectors that they're in, you can see there's 4 consumer defensive, 4 financial services, and 3 technology. If we take a look at the market cap on these, likewise, you can see that it's a few small micro caps, and it goes up from there all the way up to some mid caps. And if we take a look at the volume, you see the smallest one is Town Square Media, 45,000 shares, and that volume will go all the way up to 4.2 million on the Cody. Pretty good volume for these stocks. and that was by design. The description of the portfolio. This first part here describes the criteria that we use, and we're going to cover that in the blog post coming up. The type of stocks in the portfolio: mid cap, small cap, micro cap. The monthly turnover would be about 40 to 45%, although this particular update is less than that, and sometimes it'll vary up and down from that 40-45% level. Composition is about 1/3 mid cap, with 2/3 being small cap and micro cap. I chose the BSMAX index as the benchmark because it has about 1/3 mid cap and 2/3 small cap in it. It's a high turnover portfolio because it's adjusted every 2 weeks, and all the strategies have a high liquidity requirement, as you're going to see when we take a look at the stocks. The back test for the portfolio was performed against IJR and MDY benchmarks. They're the small cap and mid cap benchmarks, and in 15 out of 19 years tested, it bested the benchmarks. It underperformed in 3 years: 2008, 2011, 2019, largely even in 2017. But when the portfolio outperformed like it is now, it's usually by a wide margin. The best year was 2016, when it was up 86%. BSMAX, that benchmark I'm going by, does not go all the way back to year 2004. Now let's take a look at my blog post that just got posted. Here it is right here. So it does a recap of what we just did with this update. We added 4 stocks, we removed 4 stocks. There's a total of 21 portfolio now. The portfolio was up 63% since the beginning of 2023, which is 47% ahead of its benchmark, BSMAX. This portfolio is made up of 15 to 21 stocks. It's updated every 2 weeks, and it's an equal weight portfolio. It consists of 3 separate strategies used together to get a good cross-section of mid, small, and micro cap stocks. 2 of the strategies are used in my monthly model portfolio area, so you might see some overlap in selections because of that, and are being used here because they perform very well with the 2-week update cycle, in addition to the monthly update cycle. The 3rd strategy is new to this website. It's one I use personally elsewhere. The criteria is earnings per share, return on equity, change in sales, relative strength, and price to sales. And since there's 3 different strategies, which of these particular criteria is used depends on the strategy. As I already went over, we've added 4 stocks, and here they are. We removed 4, here they are. Note where the outperformers in the active section were HRTG up 59%. This is it here. Heritage Insurance Holdings. And this stock is a insurance property and casualty company. And the other one is VARC, which is Virgo Manufacturing. And this stock is a consumer cyclical, furnishings, fixtures, and appliances. Here is a link to the portfolio detail, which we already went over. I like to do a summary of the model portfolios, and the 6 of them, where we're at. And as number 1 is quant alphas, and as you can see, number 2 is bi-weekly swings. I also are doing pretty good on all the other model portfolios, with the one that's up the least compared to the benchmark is mid-cap flyers, but it's still higher, so I'm ahead in all 6. Here I have back tests of 5 of the model portfolios, and the one that we're looking at is bi-weekly swings right here. You can see the chart going back to 2004. And as a summary, I mentioned that this portfolio has increased its lead over the benchmark BSMAX since the last update 2 weeks ago, and the portfolio is up 63%. There's 4 new ads this update, and that turnover is lower than usual. If you take a look at the Google Docs tab, there's a section there that shows how many or the audit trail will show you how many updates we did in each update, how many stocks that is. So if you want more information about the stock selection, you can go to this part of the website, and it tells you a lot more detail. We won't go into it here. If you're interested, go ahead and take a look at it on the website. And I just want to mention that I do allow subscription to the blog post. It's free. If you want to get the blog post right away and not wait for the video, that's the place to go. Thank you. Hello, I guess that wraps up the video for today. I hope you got some value from it. If you did, please subscribe to my channel. And if you did like the video, give me a like, and also make a comment if you feel you need to or want to talk about something. Thank you.